So, one thing is, I have a lot of consumers and clients that have concerns about buying or selling in this market and what's going on with the mortgage rates. So, I don't know if you can tell me a little bit more about what is going on now and what you see that will happen in the near future.
Okay. With regards to mortgage rates, they're slowly but surely going down. We had last year, they peaked at just about 7%, somewhere a little bit above that in August and September. And now they're starting to slowly but surely slide down as the Fed has taken action, which is what most people don't understand is when the Fed hikes their rates, it's not directly on the mortgage rates. So it's actually
Okay.
the overnight federal funds rate, which is what one bank will lend to another, or somebody will borrow from the Fed in order to meet a liquidity requirement that the banks are required to have. But most people think, oh my God, the Fed's raising the interest rate, and
Right.
it's really not the case. So they started hiking interest rates pretty heftily last year, and they're just starting to taper this off. But they take about 9 months to a year to actually work their way into the system. So what they do is they kind of slow down the growth, and it's meant to slow down inflation. Which, if you look, we still have year over year much higher inflation than anybody wants. However, it is starting to slow down. There's going to be bumps along the way. Right now, as we record this, rates actually went up a little bit. They're in the low sixes.
Okay.
I would expect them to be somewhere in the lower fives, maybe even at 5% by the end of the year. And that's barring any world catastrophe, somebody attacks somebody else, that kind of stuff.